Welcome to this video. In this video, I'm going to be doing a stock analysis of AMC Entertainment. Now, if you don't know what AMC is, it is cinemas and stuff like that. Now, as you can see in this stock graph right here, it hasn't been the most fun stock to own. It is slowly but surely going downwards and downwards and downwards and downwards. And recently, it has actually been trading below $1, and that might be a problem because if they trade below $1 for 30 days straight, they risk the chance of being delisted if they can't rise. Now, this is a huge problem. First of all, because that means it's much more difficult to buy and sell your shares if you own any, but also because if we take a look at the last split, they did a split back in August of 2023. This often happens when they need to inflate the price of the shares because they are below $1. So this has already happened once, and that wasn't even 3 years ago. So I would be very careful in this stock. Personally, I don't own any stock in AMC, and I'm not gonna buy them anytime soon. And there are several reasons for that, but I'm getting into that a bit later. Now, if you look at the stock graph right here on where each candle is a day, we can see the huge problem this stock has had. First of all, before the COVID, it was trading at quite nice prices, trading up and down in the hundreds, going a bit slower when we hit the pandemic, and then during the pandemic, it absolutely skyrocketed as a meme stock. And ever since then, it has just been slowly but surely on the way down. Now, if I make each candle an hour again, just look at this, slowly but surely, down and down and down and down. We see some spikes, but this is definitely some speculation in the stock, as this has been a meme stock previously. But slowly but surely, it is just going downwards and downwards and downwards. We also see that down here in the RSI. Now, if you don't want RSI is, that is the relative strength index, and this shows you how many buyers there are compared to sellers. When we're between 50 and 30, we're down here in the lower bracket of the RSI, meaning there are more sellers and shorters in the market. And overall, just look at this. We are by far way more down here in the lower bracket than the upper bracket here, between 50 and 70, where we have more buyers in the market than sellers. Besides that, we also quite often see us down here in the oversold area of the RSI with quite huge portions. This means there's a ton of sellers and shorters in the market, and the stock price is falling rapidly. And sometimes we see some spikes up here, but this is definitely just speculation. As I said before, it has been a meme stock for quite a while. Now, always be careful in such small stocks where the price is $1, and they often fluctuate between overbought and oversold, as it is much more volatile when it's down here or up here. Now, however, it actually has a quite nice beta of 1.26, which means it's not that volatile, but the reason it's not that volatile is because it is slowly but surely just falling downwards. Now, if you take a look at the earnings, as you can see, they have two times they have actually beaten them, but also they have missed it, like in Q3 of 2025 down by 202%, and last time here in Q4 of 2025 down by 40%. Now, if you look at the income statements in this stock, you can see before the pandemic hit, it was quite decent, and it is actually higher than it is currently. If we look at how they make their money, admissions, that is of course tickets, and then we have food and beverages, other theater, and advertising, and so on and so forth. So in 2019, they made more money than they did last year, and this is simply because of something like streaming. Streaming is a huge competitor to AMC, which is the reason why I think I will never ever buy a cinema stock, because it's simply not that good. The only upside to this is there are in quite a lot of countries, so maybe they can hope in the future to get some subsidiaries for maybe some governments who still want to keep the cinemas run, but that is a below 1% chance of happening. To be honest, I think it's going to be delisted before 2028. Now, if we go back to the stock, we can also see here, if we go into the seasonals, just how the stock price has evolved from 2016. Most of the time it's down here in the negative. Just look at how many negative years we have. We have one great year, 2016, up by 42%. Then we have a year like 2021 where it was an absolute meme stock, but besides from that, it is negative, negative, negative. This is an incredibly speculative stock, and I wouldn't buy this or recommend anyone to buy this stock at all. Now, if we look at the technical side, we can see for the day technical, it's a sell. For the week, it's a sell, and for the month, it is still a sell. It is just a sell in the technicals overall. Now, if we go down to the analyst rating, they're quite poor. We have 2 strong buys, 6 hold, and 1 strong sell. Now, why anyone would be a strong buyer of this, I simply can't imagine, because streaming like Netflix, HBO, so on and so forth, too big of a competitor. The average price up here, which is up by 72%, I think that is absolutely insane. Now, I understand you hold quite a lot more than the sell, because if you own some of these shares, chances are it might be a meme stock again, and it could spike up quite a lot. But I would not buy this. Even to be honest, if I was holding them, I would just sell them, because I don't think anybody is gonna get any money in the investment for this unless we see a huge spike, because maybe some Reddit threads or so on and so forth is gonna pump the stock right up. If you look at the EPS, it says the same thing. They're estimating to be negative for quite a while. And also in 2029, they have to pay a ton of debt. We can go up and look at their debt as well. So if we look at how much debt they have, we can see they have $8.14 billion of debt. This is one of the reasons why I think they're going to be delisted. I can't imagine anyone is going to buy into a stock that has this much debt and nothing to show for it, because it isn't a growth stock. It's literally cinemas. And they have 33,000 employees, and they keep on making more and more shares, which then, of course, will deflate this amount even more because there are more shares being sold. So overall, I'm not a huge fan of the stock. And also annually, the price to sales is falling and falling and falling. And when it's this low of a price to sales, personally, I won't touch it at all. That is one of the reasons I really don't like this stock at all. So if we go down to the analyst rating and look at the revenue estimates, it's quite a moderate increase in revenue, but to be honest, it's not a lot, and I don't think it's enough to save this company, just given the fact they have so much in debt. Overall, I would say stay away from this stock. It is a dead sailor in my opinion. If you like this video, please don't forget to leave a like and subscribe. And don't forget, this is only for entertainment and educational purposes. But if you want to see more videos like this, please leave the company Analyze in the comment section below.